Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, over the past 2 weeks, we've been taking a look at the performance of various financial markets and indeed how well they have been performing for 2019 thus far. Today, we're bringing it all together and looking at a portfolio of these investments and how they would have performed and giving you a reminder of the importance of investing in securing your financial future. So why exactly should you be investing? Well, three main reasons, really. One is that it helps to build a financial discipline in your life. And that is by paying yourself first and investing, you will also enable yourself to moderate some of those spending habits or those not so nice spending habits over time and spend more wisely and indeed save and invest more wisely over time. Secondly, it helps you to store wealth for your future financial needs, whether it be that down payment on your first home, helping you to purchase a car, your retirement needs, your children's education in the future, etc. So that's certainly a second very compelling reason. And finally, it helps you to fight the effects of inflation on your wealth. Now, saving is all well and fine, but inflation erodes the purchasing power of those saved dollars over time. And investment or investing helps to fight that effect. And we'll talk or illustrate that a little bit more potently in the slides ahead. Now, where should you be investing? Well, it really all depends on your particular risk profile, and that risk profile might be from conservative, where you are seeking income generation and capital preservation. You have a lower risk tolerance. Your timeline is generally short, and your liquidity needs, meaning your need to access your cash, is fairly high, all the way to aggressive, where you're focused on growing your investment or capital appreciation. Your risk tolerance is higher, and you can generally invest for longer periods. Now, if you are along the lines of a conservative investor, the majority of your investments, and that's around 80%, should be in bonds and income funds, income-type funds, with just around 15 to 20% allocated towards stocks or equities. If you are a more aggressively minded investor, of course, you should have around 70% of your portfolio invested in stocks, local or international, and just around 30% in bonds, with very little allocation towards income funds and or cash holdings. Now, we've spoken about the different portfolios. How would these have performed over the past, or over the 2019 thus far? Well, we're having some challenges with the graphics, but suffice it to say, the conservative portfolio would have been up just around 6.7%. There we go in red to your far right. Your moderate portfolio returns would have been just around 9.2% for 2019 thus far. And your aggressive portfolio would have done the best at just around 10.4%. If we could just go back to that graph, would have been up just around 10.4% for the year thus far. Now, it's important to note in this particular graphic that returns are variable. All right, so we can see that there were some periods of positive performance, and in 2018, in fact, there were periods of fairly negative performance, which takes us straight into our Bourse investment themes, which are enduring, and not just for 2019, but throughout your investment endeavors. And the first of those is to lengthen your investment horizon. Why is this important? Well, it is important because it helps you to ride out cycles of bad performances or bad investing periods, as we could see, or as we saw in the 2018 period in particular. And it also helps to improve the compounding effect of positive returns over time. Secondly, and this one is fairly self-explanatory, target positive inflation and adjusted returns, which really means ensure that your investments are beating the rate of inflation consistently over time. And thirdly, and very importantly, diversify, diversify, diversify. And this is especially important to those of us who have access to US dollars. Diversifying by asset class, geography, and currency is quite an important aspect of building a balanced and risk-adjusted portfolio. How can you do these things? Well, diversification might sound a little bit challenging to some of us, but it's really much easier than you would think. There are many products such as mutual funds, exchange-traded funds, and others that will allow you to get built-in diversification by buying a single product whose assets might be spread across as little as 30 to as many as hundreds of different securities, stocks, bonds, etc. Now, all of this we can look at over the 5 years. We spoke about fighting the effects of inflation, and this blue line here shows you the impact of inflation on cost of purchasing a basket of goods. Now, over the past 5 years or so, this uses official central bank data. The rate of inflation would have led to a $100 basket of goods in 2013 costing today just over $118. Now, if you had just kept that $100 to purchase that basket of goods in 2019 from 2013 today and just left it in a savings account, that $100 would now be worth $1,101. Now, okay, that really does not help to achieve preserving your purchasing power. But let's take a look at the investment case. If you had invested that $100 in a conservative portfolio over the past 5 years, you would have actually been ahead of the rate of inflation in that, based on that yellow line, where the value of that portfolio would be just over $123, so certainly over that $118. And even if you wanted to take a more laissez-faire approach and laid-back approach, you could have invested in a retirement fund, for example, the individual retirement fund managed by Bourse, and that would, over the comparable period, would have generated returns to make that value of $100 grow to just around $130. So certainly the importance of investing here shown in a graphical illustration. Now, you're convinced about the need to invest and the importance of investing. How do you choose your investment services provider? Well, look for someone or look for a provider that gives you great information and advice. Look for someone that gives you access to a wide array of products, and look for someone with a track record of performance. Sounds like Bourse. That's it for this week's edition. For more information, give us a call at 226-8773, email us at invest@boursefinancial.com, or check out our website at bourseinvestment.com. Have yourselves a wonderful investing week. This has been the Bourse Report.